So we were having a conversation on the golf course a couple of weeks ago in terms of just like what's happening with the economy. And the last few months have been really interesting. So I was just curious of your take of what you're seeing in the marketplace now that we're into September. I mean, what are we on month like 7 or 8 of this COVID-19 thing?
Yeah. So it's really interesting, when the whole COVID hit back, February, March, and it basically shut the economy down for most companies for 60 to 90 days. I think most of the people in the workout world thought, we'd be really busy by June, and but that's kind of gotten extended out. And I think what's happened there is, the PPP money that the government provided, also in the lower end of the market, there's some SBA programs that really help companies, and the lenders stepped up and offered principal and interest deferrals on their loans, and most of them granted for a quarter, for 90 days. And then, but some stepped up for 2 quarters. So the 2 quarters would really take us into September. So I think a lot of those programs have helped companies with their liquidity kind of band-aid it through. So we're not seeing an excessive amount of restructurings in the middle market. Now, the interesting thing is if you go upper middle market, or excuse me, upper corporate market, you are seeing more bankruptcies and what have you, like the Hertz's and all the retails and what have you. But that's a little bit of a different world because, they've got really, professional managers and they're planning for those events and they have the liquidity to do it, and that's the big difference between, say, upper corporate market and say middle market. And I define middle market in 2 spaces, like 50 million in revenue and, maybe up to 350 million. And, so the upper corporate guys just have more access to cash and the liquidity allows them to file for bankruptcy. Whereas in the middle market, bankruptcy is really expensive, as you know, and it takes a lot of cash up front. And, a lot of companies in a way really can't afford to file for bankruptcy because once they file, they just never come out.
Yeah, it seems like it's being impacted on the real big companies and the real small ones, but the middle is in this weird space right now.
Yeah, I would agree. I think, in the small space, there was an initial wave of just closures. And when we say small space, I think what we're talking about are maybe, the family-owned restaurant or the family-owned retail outlet. And, there was an initial wave probably back in March, April when they shut down and just didn't reopen and what have you. And then you got the upper space where they have access to cash. And then to take it up even a little bit higher, you have like Nissan. I saw they announced earlier this week that they were raising $10 billion of bonds to shore up their liquidity. Well, they have access to that capital. The middle market guys, they just don't have that. They just don't have that option. That's probably one of the biggest challenges in the middle market is a lack of access to capital.
Yeah, I can imagine, and I would think it seems like the shoe's got to drop. It's got to fall at some point, just because production's down, especially in automotive. The numbers are still really low, aren't they? Yeah.
So the automotive space, as we all know, is volume driven, and for those entities that are fortunate enough to be on some of the higher volume or higher profitable pickup trucks, and I think their volumes have increased at a spike versus some of the other sedans that maybe not. So those companies have benefited by being on the right vehicle. Those that are not on the right vehicle are I'm sure they're struggling. The liquidity and viability is being threatened.
Yeah, and I've been watching for the next stimulus package. I know stuff has come out for unemployment benefits and things like that, but it doesn't seem like this time around there's really been a lot of help for businesses. I don't think there's any additional PPP money getting thrown in there, last I heard anyway.
Not that I've heard. I think that there's some existing programs out there. The Main Street lending program is out there, but they've had a hard time getting that one off the ground. So I don't think there's any new programs coming. I think, the help that came in terms of, like we talked about, the PPP and, the federal regulators really drove the opportunity for the lenders to provide relief on principal and interest payments. But that's coming to an end now. So, the companies in the middle market, they really, if they haven't been, I'm sure they have, but those that have it, they really got to get refocused on generating cash flow out of EBITDA and managing the working capital.
So which industries are really getting hit the worst right now? And which ones are like, actually, obviously there's some industries that are thriving too, but which ones are the ones that are getting hurt first?
Yeah, so, industries that we're working on right now, we see oil and gas. They got beat up, not so much by COVID, to be frank. It's more so related to the drop in oil prices around March and April. So, but they're starting to rebound. But a lot of oil and gas problems out there. Of course, retail. We see some manufacturing, some consumer products. It's really, I mean, the list is almost somewhat non-exhaustive in some way. I mean, anytime, the whole country almost shuts down for 60 to 90 days, it's going to be difficult to restart. But those are some of the industries and hotspots that we're seeing right now. And you have to add automotive and manufacturing in there as well. I can't say we're seeing, we're working on a lot of automotive stress right now, but I do sense that they're in the, in the danger zone where it could go either way.
Yeah, I'd be interested to talk to someone in the airline industry, because I can't imagine with all the volumes being so reduced right now. I can't even imagine how they're surviving this right now.
Yeah, I mean, I'm sure they got some federal stimulus money as well. And, just as a personal experience, I can't put any other data behind it. I have flown a couple of times in the last few months, and I do see the numbers going up. But, part of that, there's also less planes in the air as well.
Yeah, the other thing that's interesting is that even though people seem to be loosening their quarantines, it seems like the stats are starting to go up again in terms of like outbreaks and things like that. So, I mean, I guess a lot of it depends on what happens with that too, especially coming into the flu season.
Yeah, no, I think so. We've kind of it's really been all over the map. We've had quarantines and states and governments and governors really tightening the the requirements, and the Big Ten just here locally shut down the fall season. Well, now they've reopened, and so it's kind of been all over the map. So I think some of the testing is up, and maybe some of the COVID numbers are up, but fortunately, I think at least when I've looked at the CDC, that the death rates are not increasing at the same pace.
And it's an election year. I mean, we have an election coming up in a few weeks here too. So how is that going to impact everything?
Yeah, it's really interesting. I mean, typically it does have a tendency to kind of put things on hold. And I think for everyone's sake, the best thing to happen there is just get the election, get through it, and then kind of start moving on into the balance of the fourth quarter and the first quarter of 2021.
Yeah, so in terms of the entrepreneurs out there in general, I mean, what should they be looking out for in terms of watching for early warning signs that they should be talking to someone like you to get some help?
Yeah, no, that's a good question. I mean, the most obvious one is if they've defaulted on their loan agreements. That would be a red letter flag for sure. Prior to that, if their line of credit, availability on a line of credit, they see that drying up, a continued steady or maybe a reduction in sales, or growth in accounts payable and the aging of those payables. I mean, those are all classic signs, and I always tell everybody, especially if you've gone as far as busting a default on your bank agreement, make sure you get out and get some professional help. I would recommend hiring legal counsel that's familiar with bank workouts and restructuring, as well as a financial advisor. And I can assure everybody in that situation, the cost of doing that in the short run is a lot less than the cost of just doing nothing or doing the same old thing in the long run, because it just doesn't work out, and that gets very not only expensive, but owners can lose their companies.
Yeah, absolutely. So what industries do you see doing really well right now?
Knocking it out of the park. Anybody some healthcare that's related to COVID. So, for example, companies that make masks, or if they were making really anything related to that. We don't tend to get involved with companies that are knocking it out of the park, but we are seeing some of the healthcare rebound.
Yeah, in terms of what I'm seeing, in terms of health, just in general, in the angel investment side of things, people are throwing a lot of money in at-home testing. You're seeing a lot of stuff with AI still, a lot of delivery type services, a lot of anything that's leveraging this remote workforce or this remote workplace. You're seeing a lot of activity there. I mean, a lot of just again testing, rapid testing, and things like that. Just the technologies around And healthcare. I mean, healthcare seems like it's been booming endlessly. There's no end in sight for that too. And
Yeah.
health tech and things like that. So yeah, we're definitely seeing a ton of really good opportunities in terms of people trying to leverage this, because again, there's always a plus side to everything. Even in quarantine, there's opportunities that present themselves. So
Yeah, no doubt. And it's really interesting now that you mentioned that, is on the other side of the coin with so many people working at home. I've been kind of watching for the other shoe to fall on commercial real estate. It wouldn't happen really fast, but as companies get used to having their workers off-site working at home, et cetera, you would think at some point in time the commercial real estate market would, you'd see occupancies go down, and you start seeing some stress there.
yeah, just like the shopping malls, was it J.C. Penney's that organized, or the group of the mall, the J.C. Penney's that the malls organized to keep them out of bankruptcy so they wouldn't shut down in their malls?
Yeah, I just saw that. Yeah, so that's really interesting. And that's another point. Yeah, the malls have had a lot of stress because of it, and so it's interesting for J.C. Penney to kind of get out of the box and become like the mall owner, so to speak, and take that side of it. So but as you say, with every with every problem, it sort of creates a different opportunity.
Yeah.